This was probably, in the scheme of things, the most hawkish press conference he's made, right? I mean, and again, he's not really a hawk. It's just, less dovish. But this is not what the markets wanted to hear. Powell basically said, I'm not really sure what's going to happen. Inflation is higher than we thought. It's not coming down the way we thought. And so we're going to have to scale back these rate cuts, and we're going to have to wait and see. It was a close call. We were thinking about not cutting rates today. In fact, there was one dissent. There was one voice on the Fed and the FOMC. And there were some non-voting members, too, that expressed a disagreement with cutting. So there was some division at the Fed. Not everybody wanted to cut. And now they're not sure when the next cut is coming, if the next cut is coming. They can't even rule out a hike coming, which would be the appropriate policy because, they stopped hiking too soon. They never got restrictive. We need a lot more rate hikes. But again, the economy is too broke to handle them. The interest now on the debt, I think, is up to $1.3 trillion a year is what we're paying in interest. Remember, this is a moving target because every month more low-yielding debt matures, and it has to be rolled over at higher rates. And that is going to continue. The yield curve is now normalizing. You've got a normal yield curve going out from a 1 year to a 30-year. The yield on a 12-month treasury is 4.26. 2-year is 4.34. 5-year is 4.39. A 10-year is 4.51. And a 30-year is 4.68. That's all positively sloped. The only negative slope is the 6-month, which is at 4.28, which is slightly above the 12-month. And the 3-month is still higher than the 12-month and higher than the 6-month. But I think that's going to change over the course of the next few weeks. I think you're going to get the 12-month potentially moving above the 6-month. In fact, that's going to happen. And then you're going to have a positive slope yield curve from 6 months down to 30 years. So you only have a little bit of a negative in the 3-month. And that may even flip. But what's going to really happen that's going to be a big negative for the market and the real estate market because of mortgage rates is going to be the steepening of that curve as we start to see the longer duration bonds moving up even more as a result of the loss of confidence in the government's ability to rein in the deficits. As people start to realize that what's happening with Elon Musk and Ramaswamy and all this is just a bunch of talk, right? Nothing is getting reduced. We're going to be in a recession. Nobody is going to be talking about cutting spending in a recession. It's like, there's no atheists in foxholes. There are no, hard money guys, monetarists, Austrians in a recession. They all want stimulus, even though the only stimulus that works is to cut government spending. See, the Keynesians don't get that. Government is the drain on the resources of the private sector. And if you really want to stimulate the economy, you got to shrink the government. It's like if, somebody is running in a race and they've got a backpack with 50 pounds of weights in the backpack and they're trying to run a race. How do you stimulate that guy? Do you put more weights into the backpack? No, you take some of the weight out so he has less excess weight that he's got to carry around. He can run faster and for longer if you remove some of the burden that he's carrying. And so that's the economy and government. Government are the weights in the backpack of the runner, right? Slowing the economy down, with burdening it with extra regulations and extra taxes. And yes, I think we'll get some deregulation out of Trump because that doesn't cost the government any revenue. But what's going to happen when the economy turns down? It's all going to be about stimulus. Nothing is going to get cut, right? And the politics won't let it happen. Who's going to vote to cut anything? Oh, when the economy is hurting, when people are hurting, people are losing their jobs. We can't cut government programs when people need them. We can't lay off government workers as if we were going to lay them off anyway. But how can you lay people off when unemployment is rising? So it's going to be bigger spending. It's going to be higher inflation. That is what's coming. And the markets are not handicapping that at all. The markets just think, oh, well, the economy in the U.S. is great, and the Fed's going to keep hiking rates, so the dollar is going to go up. And they're not realizing how what they believe is going to happen is impossible, because we can't have the strong economy with rising interest rates when we have so much debt. And inflation is headed higher, not lower. And so we're not going to get this great economy that the Fed claims we have. We're going to have recession. And so there's a huge disconnect right now between economic reality and this economic fantasy. But it has caused this upward trajectory in the dollar. Again, I don't know how much higher the dollar is going to go than it is right now. I mean, it certainly could move higher, and that could put more downward pressure on gold. But, remember, in terms of foreign currencies, gold is holding up. And, it's not up $30 anymore. It's up $24, but it's still back above 2,600, 2,608. Look, I think gold is acting very, very strong. I read an article that the Chinese have been buying up a lot of gold recently. They're not talking about Bitcoin. They're buying real gold, and they've been buying a lot more than they've been letting on. I know there were some rumors, the Chinese don't want to buy gold now that Trump is there threatening them with tariffs. You know what? That means they want to buy even more gold. Whatever the U.S. doesn't want them to do, that's exactly what they're going to do. So take advantage of the weakness in gold. Silver also got hit. It's back below $30 right now. It's at $29.50. I don't think it's going to stay below 30. Again, I think this is where the support is in silver. So we should be buying the dip. You should be calling up the guys over at Schiff Gold, or just going onto the Schiff Gold website and fill up your shopping cart, with gold and silver while they're on sale. And yeah, I know that we're seeing the foreign markets coming down, mainly because of the dollar going up. So a lot of the weakness in the foreign markets is currency related. But I think stocks are going to go down a bit too, in sympathy with the U.S. stock market. But the U.S. stock market is a disaster waiting to happen. And the only way to avoid that disaster is to create a bigger disaster in the dollar. So either the stock market crashes or the dollar crashes. One of those two things is going to happen. I think it's the dollar, although the stock market will go down first. And that's one of the reasons that the Fed is going to go back to QE. The Fed is going to sacrifice the dollar to prop up the stock market and the economy and the bond market and the U.S. government. All that's coming. So in the meantime, just keep on buying these foreign stocks. I keep on adding, I think, to your Pacific accounts. Keep on taking money off the table in the U.S. stock market. I know people just think, hey, it's going to be great because Trump is president. Look, yes, it's better that Trump is president than Harris. The market was going to go down with Harris. The market was going to have to go down either way because the market was so expensive. But the worst of the economic downturn, the worst of the consequences for the years of fiscal and monetary profligacy, they had yet to be paid. That was going to happen. This was, guaranteed. It was assured to happen. And, that was one of the concerns I had for Trump, was that it all blows up on his watch. But one of the reasons I did want Trump in the White House when it hit the fan was because it would be much better to have Trump and his team than Kamala and her team in the aftermath of the collapse. Not because I thought that electing Trump would prevent the collapse. I just thought that electing Trump would put us in a better position after the collapse to do the right thing.